Welcome back again to my channel, and today we are covering the second part of the basic concepts of income tax law, and we are starting with the important definitions. So in order to understand the provisions of the act, one must have a thorough knowledge of the meanings of certain terms like person, SSC, income and etc. As we have discussed in the last part, there were so many things only on the basic level that we have just got like some of the things about them, but now it is actually going to be like the real meaning of the certain terms that we have to know in order to understand the income tax and calculate it. So first term that is coming under here is the SSC. So SSC means a person by whom any tax or any other sum of money is payable under this act. So that means an SSC is a person on whom the provisions of this act are applicable. They have been attracted by him by his sources of income. So basically it can be related to about anything. The assessment can be related to anything. It can be related to his income, the income of any other person in respect to which he is assessable. For example, there is a minor child of his who is earning money, but he is the guardian of his child, so he will be accessible on respect of that income. Any loss sustained by him or by any such other person, the amount of refund due to him or such other person, and every person who is deemed to be an SSC under any provision of this act. So for example, like any person who is like deemed to be an SSC, that deemed to be an SSC means the person is not effectively an SSC by his income or who has attracted any provisions of this act, but they are like to be an SSC, like as sort of, as deemed to be. Okay, so kind of a metaphor here. So every person who is deemed to be an SSC in default under any provision of this act. It does not mean that SSC has to be taken in the meaning of its positive sense, but any SSC who is in default of the provisions of this act, that means they are not calculating or disclosing their income properly, or not like fulfilling their return of incomes for a large amount of time, though even they have been attracted by the provisions of this act, are known as the SSC in default, and they also be considered under the definition of an SSC. Second is the assessment. So this is the procedure by which the income of an SSC is determined. It may be by way of a normal assessment or by way of reassessment of income previously assessed. So assessment basically is the process of assessing the income of an SSC. So that is an assessment. It can be in the normal year, for example in the assessment year, in which actually the assessment of all the incomes of an SSC takes place, or it can be the reassessment of the previous year's income. So that can be either the case. Third is the person. Person is actually a very large definition. So the definition of SSC leads us to the definition of person, because SSC can be any type of person. So the person can be individual, HUF, company, firm, AOP, BOI, or local authority, or artificial juridical person. So the first definition that we're learning about is the individual. The individual means only a natural person. That means a human being only. So it includes both males and females, and it also includes the minors and the deceased person. In case of minors, it would be including the guardians, and in the case of deceased person, it would be including their legal representatives. Next is the HUF. So HUF is basically a very legal term that we have to learn about in like large extent. So basically an HUF includes, it's a head of the family. Basically HUF is a Hindu undivided family. So that means basically, okay, let's read something about it before. So Hindu undivided family has not been defined under the Income Tax Act, but it has been consisting of the all males lineally descended from a common ancestor and includes their wives and daughter. So some members of the Hindu undivided family are called as co-partners, and their head of the family is known as Karta. And there has also been a change that had come on 6th September 2005. The daughters may also be accorded co-partner status as other male members in the family. So basically it is in the simple language, what is Hindu undivided family? So basically by the birth status, they have been not by through any contract or anything, they have been like by their birth status, they have been determined as the Hindu undivided family, and whatever the property comes under the Hindu undivided family, how it is going to be determined among the members and among the head of the family, that has been included in this definition. So basically the partition of assets of the family, that has been the main concern why Hindu undivided family has been included in the definitions of the persons. So the relation of an HUF does not arise from a contract but arise from status. There need to be more than one male member or one female co-partner with effect from 6th September 2005 to form an HUF. The Income Tax Act 1961 also does not indicate that the HUF as an assessable identity must consist of at least two male members or two co-partners. So that means Hindu undivided family can be formed at any point of time. HUF have to include at least two male members or two co-partners. So under the Income Tax Act 1961, Jan undivided families or Sikh undivided families are also assessed as an HUF. So basically the HUF status has two different kinds of law that have been applied to them. So it is basically the schools of Hindu law. It is Deobagh school and Mitkashra school. So this type of Hindu law is followed in states of West Bengal and Assam, and the Mitkashra school is being followed in rest of India except West Bengal and Assam. So basically what is the difference here? It is being written here. So basically nobody acquires the right to share in the property until and unless the head of the family is still alive. So basically they only get, the co-partners only get the right in the property only on the death of the head of the family, but here the members of the family, they acquire the right in the property by the birth only and not by succession or irrespective of the fact that his elders are living. So that is just the main difference. Now next is the company. So basically company is something that incorporated under income tax, the company is basically something that is incorporated under the Companies Act 2013 or any other previous company law. So basically it includes any Indian company, any body corporate, any institution, association of body which is assessable or was assessed as a company for any assessment year under which the Income Tax Act 1922 or for any assessment year commencing on or before 1st April 1970 under the present act. It includes any institution or association or body when incorporated. It can be Indian or non-Indian, which is declared by a general or special order by the CBDT to be a company. So basically there are company, like the basic definition of a company is like it is incorporated under the Companies Act 2013 or under any previous company law. So basically what is the classes of company they have been defined here? It can be a domestic company, it can be a foreign company. Domestic company, basically by the word you mean an Indian company, but it includes much wider term because it can include irrespective of its income liable to income tax, has made the prescribed arrangement for the declaration and payment of dividends within India. Means if there any kind of income or any kind of dividend declaration or income that is liable to income tax has been like coming, like has their kind of declaration within India, that means they have to give some dividends in India. So that means they have some of their business in India. So that comes as a domestic company, okay, even though it is established outside. So the two conditions should be satisfied so that the company can be regarded as an Indian company. The company should have been formed and registered under the Companies Act 1956 and the registered office or the principal office of the company should be in India. The expression Indian company also includes the following provided their registered or principal office is in India, a corporation established under or any other central state or provisional act like the Financial Corporation or a state road transport corporation, an institution or association or body which is declared by the board to be a company under section 2, a company formed and registered under any law relating to companies which was in force in any part of India other than Jammu and Kashmir and Union Territories mentioned in subclause 5 below. In the case of Jammu and Kashmir, a company formed and registered under any law for the time being in force in Jammu and Kashmir. In the case of any of the Union Territories of Dadra and Nagar Haveli, Daman and Diu and Pondicherry or state of Goa, a company formed and registered under any law for the time being in force in that union territory or state respectively. So for whatever time any of the companies or any of the association which was registered in for the time being in force, any of the corporation or any of the association which was registered under the law which was forced in the Union Territories or in the Jammu and Kashmir at that time are also included as an Indian company, because now whole of India means including Jammu and Kashmir because of the lifting of that provision. Now the foreign company means a company which is not a domestic company. So basically all the companies which have their like registered officer, principal officer or like work outside India, they have been like calculated as a foreign company which are not domestic company. So firm, next is the term. The firm basically means a partnership. A partnership is a relationship between persons who have agreed to share the profits of business carried on by all or any of them acting for all. The persons who have added into partnership with one are called individually partners and collectively a firm. So basically it is under law, it is registered as a firm, that is known as the firm, and it includes limited liability partnership which is registered under the LLP Act 2008. Next is the association of persons. When persons combine together for promotion of joint enterprise, they are accessible as an AOP if they do not in law constitute a partnership. So basically association of persons is like for a common purpose or actions, voluntarily the people are coming together to like fulfill that purpose, and it can be their co-heirs or co-legatees or co-donees which can be like, it does not mean that they income which is arising on the part of the AOP has to be distributed jointly or like in the equal terms. So basically it is just a voluntary action that they are taking together. So next is the body of individuals. So it denotes the status of persons like executives or trustees who merely receive the income jointly and who may be accessible like in manner and to the same extent as the beneficiaries individually. So basically they are just the persons who have come together, not necessary for the common persons, but they stand their status in the body of individuals as they have been like standing their status if they are taken beneficiaries individually. So basically their task is not to come together and to fulfill something, but it is just something they are part of. So it is not necessary whatever the income that is arising on the part of that body, they have to be like shared like jointly or something like that, and whatever the income that is arising on the BOI has already been taxed, so it is not taxable on their hands. So it's basically their income that they are arising, not even for their voluntary actions, and active participation is not needed in this. So basically what is, you might be confused under these two terms, like they sound very similar, but the major difference between the AOP, BOI and firm is that the firm is legally registered. AOP, BOI are not legally registered. So difference between AOP and BOI is that in AOP they are the members, like in both of the terms they have their members, but in BOI it can only be the natural persons like individuals only, but in AOP it can be like anything, firm, company, for like limited partnerships and like kind of things. But And in AOP and BOI, AOP has a common trust or purpose to come together, but BOI does not include any such common purpose or thing. Now, the local authorities are some like the common municipal committees, district board, or body of port commissioners, or other authority legally entitled to be entrusted by the government in the control or management of a municipal or local fund. So basically, there is like a local authority. You mean just like in a common area, some like things develop, and they have some authority to carry out some like local acts, so which is also entrusted by the government. Like they have their like thing going on like with the government, they are said to be like working under the government, that is like actively there. So basically these are the local authorities, and they are also taxable. So basically whatever the work they have been entitled to entrusted by the government, only on that part of the business income arising they have been taxable, but any other service or thing that they are providing, that is a different matter. Okay, that's come under the different thing. But however, the basic supply of water and electricity, no matter how, it is exempt from tax. Okay, now comes the artificial juridical persons. So basically whatever the thing that is not covered under any of the previous definitions come under the artificial juridical persons, given that it is legally registered. So basically it is the entities which are not natural persons but are separate entities in the eyes of law. This is a residual category would cover all artificial persons with juristic personality not falling under any other category of persons. So deities, bar councils, universities are some important examples of artificial juridical persons. So it is there. Now may I read you the juristic personality meaning? So basically it is not natural person but an entity on whom the law vests with the personality. So basically by the action of some people and under law, a group has been like entitled as a different personality from the people who are actually working for it. For example, like university, okay, the people working under it are like they're working, but university has its own personality like any college or university. So that is the artificial juridical persons, but it is not covering under any of like previous definitions, not AOP, BOI, local authority, firm, company, or even an HUF or an individual. So basically it is covered under the artificial juridical persons on whom on that basis the income tax will be applicable like that. Next we are covering the definition of India. So basically the term India means the territory of India as per Article 1 of the Constitution. The territory, it includes its territorial waters, seabed and subsoil underlying such waters, continental shelf, exclusive economic zone, or any other specified maritime zone, and the airspace above its territory and territorial waters. Specified maritime zone means the maritime zone as referred to in the territorial waters, continental shelf, exclusive economic zone, and other maritime zones Act 1976. So basically India, as we know, the part of the like the world it constitutes, the part of the land it constitutes, plus its territorial waters, like the waters that we have around our like mark of land, plus its continental shelf and the subsoil and the seabed that is carrying under its ocean waters, plus its exclusive economic zones under it, and its specified maritime zone in the airspace above its territory and territorial waters. So I also made some summary points for you all, and you can rate it out from here by holding the screen. So it is first an SSE, then it is the assessment, and then it is the person, which includes individuals and HUF. Then we have the discussion about the company and the types of companies, domestic company, foreign companies. Then we have the firms, and then we have the association of persons and how it is different from the partnership. Then we have the body of individuals and how it is different from association of persons. Then we discussed about the local authority and the artificial juridical persons, and then we discussed the definition of India, and that's it. So that's it for this part of the chapter, and I will meet you in my next video for this rest of the part. So until then, have a good preparation. I will meet you in my next video. Bye bye.